Hi everyone and welcome back to today's morning report with me, Richard Perry, market analyst at Handtech Markets, for Tuesday the 20th of May. I'm going to look at sterling dollar now, and in the last couple of minutes that I've been speaking, sterling has started to shoot higher, and that has been on the back of this inflation data that's come out. And inflation in the UK has just jumped to 1.8% from 1.6% last month, and that is ahead of the 1.7% expected. So that now will increase the pressure on Mark Carney that he's finding in all the communications that he's having to put out, and the pressure that the market is putting on him to raise interest rates. And cable is jumping at the moment. I will just zoom in slightly here, and it's the resistance is at 68.74 initially, and then 69.03 as the two resistances within this corrective downtrend. But certainly the reaction has been positive, hit a high of 68.63. However, you would still argue that if this rate doesn't really push on from here, then the technicals are still suggesting that there may be some sort of opportunity to trade here, purely by the fact that there is this big overriding head and shoulders top pattern on the intraday chart, the 1, 2, 3, and then the right hand shoulder there, and whilst you're trading below that the top of that right hand shoulder, which is 69.03, then you would say that the downside pressure is still remaining on the corrective side. However, this inflation data is fairly sterling positive, certainly in the near term, and we'll see how this reacts before I think making any sort of trading move. But certainly at the moment, the initial reaction was up. It's sort of now slightly corrected backwards, but I think it's probably worth waiting to see how it actually pans out. On the daily chart, you'd say that there is still that you've had this correction and you've had a few positive days. I think yesterday was fairly weak as a trading day, but certainly that inflation data has increased the positivity in sterling near term. But as I said, I think maybe just waiting for this one to settle down. Initially, that initial move is just beginning to lose a bit of momentum on the upside. So the initial rejection of that move could be a possible chance to sell. But I think the fact that this inflation data has come up at 1.8%, which is a fairly strong number, and it snaps a trend of probably the last 8 to 10 months of sterling, of UK inflation falling. That is an interesting bit of that's an interesting change of direction in that inflation data, which could, as I said, put pressure on Mark Carney now. But I think what we need to do is just wait and see how this one just settles down. The key supports, I think you'd probably say, is on around 68 big figure, which is where the low of today has come in just prior to that inflation data. And if that move is rejected and we start to drift off again, then I think that would suggest that the technicals are still overriding this whole chart on a near-term basis, because that pattern still suggests a correction back towards 66.60. So that is what the technicals are showing. Also, I pointed out in the morning report, you've got this 200-hour moving average, which provided the basis of support on the way up. I'll zoom out slightly. Provided the basis of support throughout this move higher, but then has turned over and has become sort of a basis of resistance now, and it's pretty much basically where we're trading at the moment. 36.39 is where that 200-hour moving average comes in, and we're currently now back at 68.39 as well. So it could once more again be the basis of resistance once that spike just calms down a bit. So I think this one's just worth waiting and just seeing how the reaction unwinds on this sterling chart here. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.